Right, record button is pressed, microphone is up here, audio is coming through, we've had a check there, and the screen is showing. I can see it's live there being shown. So welcome everybody, welcome to the Australian blue chip stocks that stand out. It's now 11 a.m. Sydney time equivalent, and I'm just looking at the other screen there to make sure that there's no questions or anything coming through. If you've got questions, put them through to me, or any alerts. If there's an issue not working with the technology, let me know and I'll get onto it ASAP. All right, so with that said, let's jump into our disclaimer statement here. Please note our license number there. You can also check us out further per our webpage. In addition, today, I'm only providing general advice, all right? So I cannot take into account your personal circumstances. All right, you should consider whether the advice is suitable for you and your personal circumstances, all right, with your advisor. Past performance is not a guarantee of future results. Forecasts and backtests used or discussed today, which we will do in this presentation, are intended as a guide only, and actual results may be affected by known or unknown risks and uncertainties and therefore may differ materially from the results ultimately achieved. All right, the disclaimer statement out the way. I want to get right into today and show you two methods to finding powerful blue chip stocks. And method number one is going to use the VectorVest watch list. All right, so a VectorVest watch list, one of the watch lists that we've got there. I'm going to concentrate on the ASX 100 watch list. All right, with that said, without further ado, let's jump into VectorVest. So I'll bring up VectorVest, load up VectorVest here, open it up. And this is the one I want to refer you to, all right? So I want to refer you to the S&P ASX 100 watch list, okay? So per watch list viewer here, all right, here it is, watch list viewer. I'll close that one out for now. We're going to go down to S&P ASX, all right? So if I effectively go to the viewer's home, all right? So when you click on viewers, go to viewer's home, and then click on go to watch list viewer, all right? Watch list viewer. We just simply scroll down to the S&P ASX. That's where we open it up, in the ASX 100. All right, so that's exactly where I'm going. I'm going to right click and I'm going to auto fit all columns. All right, so S&P ASX 100, and here they all are. So what this does is it effectively sorts all the stocks with the best fundamentals and technicals at the top of the list. So all the ASX 100s, there it is, top 100 by the best combinations of fundamentals and technicals. All right. And what we then do is we begin our analysis. So all I'm going to do here is I'm going to graph the top couple here. All right. So I'm showing the top 25. Let's just simply show the top 10. And what I'm going to do here is I'm going to graph all of these stocks. All right. And let's do that. All right. So we're going to maximize that out over here. And over here, let's pull this over here just a tad. And this is what I want to effectively show you. I want to show you the relative timing, EPS, and CI. So before we get into all this, let's just turn this all off for now. All right. There's the left to right price pattern taking place. All right. So if I just quickly whip through the stocks here, you can see they're in good uptrends. All right. As you'd expect with good fundamentals and technicals. So if you're new to VectorVest, you might be wondering what this all means. Let's break it down and make it nice and easy to follow. So to do so, what I'm going to do here is I'm going to jump back into the slide sets here. Let's bring it up. All right. So we've shown you where to get it. Watch lists. So you go to viewers, click on watch list viewer. It's that simple. You go down to the S&P ASX 100 or 200, depends where you want to go. So for example, if I want to look at blue chip stocks in the ASX 200, then I'll click on the 200. For today, I'll concentrate either on the 200 or 100. It doesn't matter. All right. And then this is what we're going to do. Automatically, VectorVest will sort the shares with the best combinations of fundamentals and technicals. Okay. And the first one I want to concentrate on, it's on a scale of 0 to 2, is an indicator called relative value. Now, here's the thing. I'm going to whip through these definitions. I'm not expecting you to, if you're new to VectorVest, to understand them all straight away. It's just giving you an appreciation for what's going on. This is how we find the best combination of fundamentals and technicals. So the first indicator we're looking at here is relative value. So looking for long-term upside potential, okay? So moving across here. Sorry, I've jumped about 20 screens at once here on my thing here. All right, let's go back. All right, sorry folks, I'm not sure what happened there. Okay, so the first one we're looking at here, just to go back, relative value. And we're looking at relative value over here. All right, I can see what's happening here. My mouse is just a tad sensitive, so I'm really sorry about that. Let's jump out of here and have a look at relative value. All right, so relative value, looking at long-term upside potential. It's on a scale of 0 to 2. So there is RV. I'll bring back my slide here. My mouse won't jump around. I think I've controlled it. There we go. Okay, relative value. Scale of 0 to 2. The higher above 1, the better. Looking at long-term upside potential. So what this is telling us, QBE insurance is likely, not saying it will, but is likely to outperform a AAA corporate rated bond by up to 59% in the next 1 to 3 years. So the question is, where do I park my money? Do I put it into, say, cash or a term deposit or a government bond? Or am I better off to hold QBE insurance? Now, right now, as it stands, QBE insurance is likely to outperform a triple corporate rated bond by up to 59%. All right, Gud Holdings up to 36. Pro Medicus just slightly below. It's neither here nor there. Telix Pharma up to 70%. So you get the idea. So we want to make sure that our stocks have good upside potential. The next one then to look at, well, it's all very well to say that a company has good upside potential, but a company must also have low risk. So that company needs good fundamentals behind them. Okay, relative safety on a scale of 0 to 2. So again, it's also on a scale of 0 to 2. Relative safety, the higher above 1, the safer those companies are relative to all the other companies in the VectorVest database. All right, so looking here, I can see, get myself out the way, QBE 1.33, well above 1, so that's good. Gud Holdings, again, 1.21, etc., etc. All right, so you can see some very good scores popping up there. And then what we look at, so these are the fundamentals, RV and RS. We then also look at the technicals on a scale of 0 to 2 as well. So relative timing, looking at the direction, magnitude, and dynamics of price history, which are used to determine relative timing. So again, looking at the list here, relative timing, you want this to be above 1 and rising. So the higher above 1 and rising, the better it is for those companies on average. So jumping out of here, so I was on the 200 list. I'm not really too fussed. If any of you want to let me know in the chat box which you prefer to analyze, the top 100 or the top 200. I did say it's a blue chip presentation, so I'm leaning more towards the top 100. That way I can't be accused of not showing you blue chip stocks. These are the top 100. Okay, so I see a few of you noting, yep, 100. Okay, so let's stick with the 100 and let's do the following. So let's graph them for now. And what I'm going to do here is I'm going to put on, so we looked at relative timing. I've got my graph layout. I've saved it already for today, and I've called it blue chip stocks. So I'm going to put this one on just to speed things up, and I'm going to just do that for now. All right, so all I want to look at to begin with, when looking at a blue chip stock, I want to make sure that the stock technicals are racing upwards. In other words, momentum is on my side. Here I can see the technicals broke above 1 on a scale of 0 to 2. All right, so I can see that the technicals broke above 1.02 as of the 29th of August. If I go back a day prior, bang on 1. So it goes above 1 on the 29th of August, price at $14.64, price now just shy of $16. So we've had a technical breakout. Now, in addition to the technicals, when looking at our blue chip stocks, we want to make sure that they're backed up with fundamentals. All right, so I'm going to put this indicator on here. This we haven't covered, so I'm going to cover it now. It's a 12-month leading forecast on the earnings. So it won't agree with your broker, won't agree with Thomson Reuters, Bloomberg, whoever it is that you may use. This is proprietary. It looks at historic, current, and then builds in forecast. It's a 12-month leading forecast on earnings. So you can see here, the earnings have continued to grow, not only the past, the current, but also the forecast. So the earnings continue to hold up. So there are your fundamentals. The technicals continue to motor upwards. This is what we're looking for. Now, going back to my slide set here, and I'll make sure it doesn't jump around this time. We also then roll it up into a master indicator being VST. So all these indicators, our master indicator combines RV, RS, and RT. So remember, RV and RS are our fundamentals: relative value, upside potential, relative safety, how safe those stocks are, and RT, the technicals, are they moving up in price? And we combine them together: VST, value, safety, and timing. So jumping out of here, just closing out of here, you can see this is how we sort those lists every day. So the ASX 100, you can see here, VST, sorted in VST descending order. The companies with the best combinations of fundamentals and technicals are at the top of the list. So that's how we came about to get these in the order that they're in. And scrolling into individual components, you can see, look, QBE 1.59 on upside potential, likely to outperform a AAA corporate bond over the next 1 to 3 years by up to 59%. 33, 1.33 on relative safety, well above the average of 1 across all the stocks in the database for its financials. So it's looking at the effectively how safe those stocks are based on the consistency and reliability of company financials. So, a 1.33 is a very good score. It's well above average. And then the technicals, 1.26, we saw that on the graph. The technicals are motoring upwards. All right, so you can see there's the technicals at 1.26. Earnings are coming up. Technicals are coming up. All right, if we add in our VST indicator, just to show you here as well, I'm not looking at the trend. I just want to make sure it's effectively above 1. It's always good to see, of course, it going up, but it's above 1 at 1.38. So for our blue chip stocks, we want our VST to be above 1. We want our technicals to be rising and our earnings to be rising. And you can see over here as it takes place here, very nice indeed. All right, scrolling to the next one here. Origin Energy here, let's pull it back a tad. You can see big uplift here in the earnings. So the earnings started to really start motoring around about here. You can see the earnings starting to pick up. Price is starting to move. And the technicals, I have to go back just a wee bit more in time. Here we go. This was the last time it broke above 1. There it is. It broke above 1 here. So let's scroll it forward. Breaks above 1 up here. Technicals start awakening and start really powering up. I am seeing this. I am seeing just a little bit of a slowdown in those technicals, but the technicals are still above 1. So that still bodes well for momentum. So the earnings are up. Technicals are holding above 1. Let's look at our VST. Our VST is nice and steady there, well above 1, holding sort of quite consistently around about the 1.25, 1.3. Yes, and the question asked by David there, is the principle the same whether the 100 or the 200? Spot on, David. It doesn't matter whether I'm looking at the 100, the 200, the 300, or even if I'm just looking at a different watch list of stocks. If you want to find the best companies there are, combine the fundamentals and technicals together using this technique. So spot on. And these are the things I'm checking for, all right? So here we are, is Origin. All right. SOL, Wash, HSL, Patterson. All right, this one here, big uplift in the earnings. Look at that, huge uplift in the earnings. Technicals broke above 1 over here, and they've been holding above since. So that's good to see. So let's zoom it in. There we are, breaks above 1, just around about here. Now, you'd be forgiven for saying, well, at that point, do I jump in? But, that's why I always like to pull back the graph just a little bit prior. Look, uptick in the earnings there. Earnings have continued to track along, and then another big upgrade in the earnings, and up goes the share price again. So at that point there, when you saw the technicals breaking above 1, you've got enough evidence to see that the earnings are on track. All right, so there you've got your fundamentals there, your technicals and your fundamentals line up. Price there at $31.71, price now $34. All right, let's keep going. Next one here. All right, breaks above 1 here. We've had a lot of evidence for quite some time that the earnings are turning around. Price at 37, price now at 41. Now, Aristocrat, of course, doesn't just have a lot of its gaming machines in Australia. In fact, I think most of it is in Macau, the island just off China. So a lot of the business comes from Macau, as well as also the United States. So it's not just simply the leisure machines related to Australia. There's a lot of offshore business there as well. I'm sure a lot of you know the finer details probably better than me. For those that are invested in Aristocrat, you're probably keeping up to date with all the announcements. I'm not sort of as fast to drill into all the micro components. I'm trying to look at the bigger macro picture here. This would alert me at that point. I'd look at this and go, okay, there I saw technicals breaking up to the upside, earnings, then a little bit of a dip, up it goes again. So at this point, I might start looking through the company announcements and say, what's going on? This is looking quite good. I'd then get up to speed with the micro detail, but it's all there on a plate for me. In the early days when I was investing to blue chip type stocks, it's been days trying to research a company, and by the time I sort of worked out a company to invest into, the opportunity was gone. The momentum had slowed down or something had changed. So this speeds it up quickly for me. I go, oh, technicals, earnings, boom, and away I go. 38, now at 41. All right, moving in again. Same principles over and over again. This one here, let's see. The relative timing stayed above 1, just held above 1.02. So we can go back all the way to here, where it breaks above 1 around about here. Okay, you can see plenty of evidence that the earnings kept powering up. Lots and lots of evidence. So there was your last opportunity where it both lined up. Technicals above 1.02, earnings rising. Entry point 1984, price currently 29. And still not an exit because the fundamentals and the technicals are lining up. So you can see this time again. Now this one here, here's a trick question, right? When would you get into this one? Well, I wouldn't get into this one right now at all. And again, I can't give you personal advice, speak to your financial advisor, but what I'm seeing here, and let's pull this over here. You know, what are you seeing here, right? You're seeing these earnings are falling away. Down and down they go. This I don't like. Yes, okay, I can see short-term technicals are breaking above 1, but I'm seeing the earnings doing this. There's a divergence here. If you continue to see earnings fall, at some point you'll see the share price continuing to fall as well. There's only so long a company can keep going up while earnings are sort of on the decline. Now, it's not to say Whitehaven Coal is not a good company. It's had a tremendous run in recent times. Here, the earnings were going gangbusters, and for a lot of that time there, the technicals were well above 1, so this was a very good time here. But we're seeing a slowdown here. See, as the earnings come off, the share price is coming off. So, you know, zooming it in here, let me put my date line back on. Zooming it in here, you know, I'd want to wait for those earnings to start turning around again. All right, here, CPU, computer share, great set of earnings from there onwards. So you can see the earnings really going gangbusters, pulling it back a tad and bring in the date line. Technicals break above 1 here. There it is, it breaks above 1, up it goes. Earnings bouncing around about here. I'm getting a lot more evidence. Now I'm seeing the turnaround, and definitely by here, I'm feeling pretty good. So the early sign here is the technicals broke above 1. Let's just see, did we get enough evidence leading up? Went a bit sort of flat, but when you pull it back a bit further, you can see, well, hang on, the earnings are actually holding up okay. All right, so, you know, just do zoom out just a tad, just to double check. So it was a little bit choppy, but nonetheless, the bigger picture was still intact. So around about here, 22 odd dollars, 22.33. It's now at 26. All right, so you get the idea over and over again. Like here, that's where the technicals break above 1. Let's look for evidence on the earnings. All right, now would you want to get into this one? So again, you know, it's a bit like Whitehaven Coal. I'm just continuing to see those earnings slide. Yes, you know, I'm seeing a divergence here. The technicals breaking up. So for the more adventurous, there's your technical breakout at 113. It's now up 127. But for the fundamentalists, they're sort of looking, going, not my cup of tea just yet. I want to see fundamentals and earnings lighting up. Okay. All right. And look at this one. Great set of earnings. There's your breakout point above 1 there, around about here at 467. It's now 580. But look more closely. Would you get into it here? Big uplift in earnings continuing to go on. just be careful. The technicals are starting to wane, starting to fall away. All right. Now, we've established both fundamentals and technicals. I'm going to throw in an additional indicator because this one's a really useful indicator. All right, so let's go back to the first one here, QBE Insurance. And I'm going to throw in one additional one here called CI. It stands for Comfort Index. I'll just make it jump out just a tad more for us. All right, this one here, Comfort Index. And I will go to my slide set here. All right, so how comfortable are you with a given stock? So here's the definition. CI, Comfort Index, is an indicator which reflects a stock's ability to resist severe and or lengthy price declines. CI is based solely upon a stock's long-term price history. Whoops, put a typo there. And predictability of financial performance are the primary factors in assessing assessing CI. I'm sorry about that. I'm not sure they are. Let's just tidy up the slides. So you've got a nice definition there. All right, there you are. So this was one I put in at the last second today. I thought, well, I didn't want to overly confuse everybody. I want to keep it simple, but I think this one's a really important one that I wanted here to share with you. All right, so I'll just update the slide set there. Okay, so here, this is where it gets interesting. CI breaks again, as you guessed it, on a scale of 0 to 2. CI, Comfort Index, breaks above 1 here. Just on there, 3rd of January for QBE. In fact, if I go back a day just to double check. All right, so there it's 0.99. Let's get the exact entry point there, 102. All right, 22 December 2022. So for the more sort of a technically inclined investor, there it is, Comfort Index. Looking at that stock's resilience. So at that point there, we're picking up on the technicals, how they are, that there's a turnaround taking place. Look at this, 13.27, price now at 15. And then all I'm wanting to do is combine it to make sure that the earnings are stacking up. So what I've been experimenting with is just simply using CI, because CI is looking at that resilience along with earnings. I also double check the relative timing just to make sure it's above 1. And this has provided some very good entry points too. All right, so again, over here, it sort of goes above 1, pulls back, then it breaks above 1 again. At this point here, you can see the earnings are holding up. And you can go back and you can just double check your technicals are above 1 at that point there too. Look at that entry point. CI hasn't fallen below 1 since. So $8.15 all the way up to $8.86. Just to go back to the first one as well here, CI hasn't fallen below 1 yet. So it's showing us there's still upward momentum, or at least there's still resilience in that stock. Okay, here CI is above 1 around about here. $30.83, it's now 34. CI has not broken below 1 since. All right, so if you prefer this technique, this is an incredibly powerful technique here too. You can see there 1.02, price at 36.80, it's now 41. Okay, so quite a few of our subscribers use this technique as well. All right, so there we are. CI breaks above 1. Where was it? Around about there, 104. 22.63 is now $29. All right, so incredibly powerful way of screening for both fundamentals and technicals. Look at this, CI starts to fall away quickly here. So this is where you want to really be careful. Breaks below 1 here. You know, you'd have to ask yourself, why would you still want to be in the stock? All right. Okay, let's see, keep going on a bit here. No, see, look at that, CI is below 1 and falling. So although the earnings are going up and the technicals are going up, what this is telling us that this stock has had, you know, a bit of a turbulence. So if you're after more longer, smoother sort of trends, you probably want to wait for that CI to break up above 1 again. All right, you can see here, you know, very volatile time period. CI is sitting well below 1 currently. Okay. Yeah, nice. It's nicely above 1 and rising. There was your entry point, CI breaking above 1, round about there at 450 odd, now up at 580. But look at this, technicals are starting to pull back, yet the CI is remaining pretty resilient there at 1.4, along with a great set of earnings. So, when you look at all this together, you might still be tempted to hang on just a wee bit until you see technicals do break, until they do break below 1. All right. So you choose how you want to do it. Probably the most common method is using relative timing and EPS. Brilliant. Find those top fundamental stocks. So simply click viewers, watch this viewer, go to your ASX 100 or 200. They'll be sorted by VST in descending order. Go through, graph them, rising EPS, rising RT. Boom. Great stock to consider. If you want a little bit of extra, throw in the CI, the comfort index, should you choose. Okay. Let's see. Helen asked a question. Hi, Russell. So I've just got to turn my head just while I read the other screen. Hi, Russell. Do you have a rough time frame, e.g. more than 3 months or 6 months, that you prefer relative timing to be greater than 1? It's more the trend, Helen, but yeah, look, the longer the better in terms of a time frame. But, the way stocks are, nothing's going to stay up forever. It's just no asset class does. It does have cycles. As long as I'm seeing a good trend, I want to get in early on that trend as well. But if you're more conservative, the longer the better. I haven't got a definitive time frame as such, but to answer the question, the longer the better. You can see over here, there it breaks above 1, so that time frame there has only been 2 months, for example. Bearing in mind the market has been fairly volatile in recent months, so it's only in recent days here where we've had a bit of a breakout in some of these blue chip stocks. This one here, if you after something a bit more conservative, this one's been a lot longer, right? The time frame's gone from there around about. So what's that? About 11 months. So carsales.com has had a very good time frame from the technical. So it comes down to what you're after. If you're more conservative, then you're probably going to feel a lot more comfortable with this one here. The technical's been up above 1 for over 11 months, nearly a year. You can see CI has been up since above 1 since April. So it's been quite some time. And you can see the earnings. The earnings have been in a superb upward trend. Look at that, all the way back since 2021. Over 3 years worth. If I pull back even further, look at that. Around about January 21. So if I'm conservative, this one's going to jump out more at me. All right. And certainly what I'm looking at right now in the short term, looking to get in, well, yep, that ticks the box because the technicals above 1, the earnings are rising or holding steady, and the CI has been trending nice and steady above 1 for quite some time. All right. So I hope that answers that. The longer the better, depending on how conservative you want to be. David asks, how do you find the definitions? Great question. Right click any stock. So it doesn't matter where you are in the ASX 100, 220, whatever it might be. Right click any given stock, and then you can view the full stock analysis report. All right. So if you're new to VectorVest or you're looking to take out a trial, whatever it might be, this is one of the first things I'd look to do if I'm new. Get into any stock, right click and print out one of the reports. So you've just got the definition. So you can see over here, you've got all the definitions. There's comfort index, for example. It's indicator which reflects a stock's ability to resist severe and or lengthy price declines. CI is based solely upon a stock's long-term price history. All right. So there we go. And, and again, it's all the key definitions here, and we've got a lot more technical details down the bottom. All right. So we've looked at both fundamentals and technicals. Now, I know what a lot of you are thinking. Well, the reason why we buy the blue chip stocks is, yes, not only is it good to get some price appreciation potential, but, I'm buying blue chip stocks because I want those dividends. I want the franking credits and the dividends. How do you do that, VectorVest? So then what we do here is scrolling across, you can see we start to get our dividend indicators. So I've just moved my indicators around so it's nice and easy to see. So I can see here dividend yield, interim franking credits, and final franking credits. All right. So looking at it over here, I'm impressed. 2%, 3, 2. This one a little bit lower at 1.35. Car sales 2. Whoa, Whitehaven Coal 10. Computer shared 2, just shy of 4 with AMP and Insurance Group 2, and whoa, look at that, Woodside 10.94. All right, so I'm looking at these yields and I'm going, okay. And then I'm looking, well, not only am I going to get the dividend potentially, not always guaranteed, am I going to get the dividend, and then what franking credits are associated. All right, and if you're worried about whether you're going to get the dividend or not, we have this indicator in VectorVest here called DS, Dividend Safety. This is not a dividend talk as such. I'm happy to sort of do another webcast where I can bring that up in a lot more detail. But let's just do this just to speed things up here. You want to make sure that your dividend safety, it's on a scale of 0 to 99. You want to make sure that that dividend safety score is at least 50 or better. So I'm looking at all these here, very, very good, except for Woodside. I'm not saying I won't get the 10% dividend, but I'm less likely, statistically speaking, right now, than I am with, say, QBE Insurance or Origin Energy, which have very good safety scores. AMP, a little bit under pressure at 46, sort of borderline. Not saying you won't get it, but it's under more pressure than the other ones here. Okay, so what I'm going to do here is I'm going to go with the first technique, and I'm going to go and add the top 10 stocks into watch list. All right, so what I've done here, so I've created a group here called Blue Chip Superstar Stocks. Let's see here, I'll take these out. It's just experimenting before the webcast today, just to create. So if you're new to VectorVest, you just create a new group, give it a name. In this case here, I've called it Blue Chip Superstar Stocks, and then once you create the group, you select the group and you can create a watch list, and again give it a name. It's effectively just doing this. It creates the watch list within the group. And what I'm going to do here is I'm going to go back to our S&P ASX 100, top 100, and I'm going to put the top 10 in there. Right, so I'm just going to select them, right click, and I'm going to add them to my watch list. And again, if you're new to VectorVest, don't worry, this is pretty easy to do. Once you've done it a few times, just practice doing it and you'll become really good at it in no time. So don't get worried about the functionality, it's the methodology. Once you know the methodology, you can always call our support team and they can even help you do it on the spot. All right, so I've put the top 10 in there for now. So that was method number 1. All right, so I'm going to go back to my slide set here. Method number 1. We spoke about all that. So graph the stocks, look at relative timing, look at the EPS. So we spoke about all that here. And then also spoke about looking at CI. All right, so we've covered all that. All right, and we also spoke about the dividends on offer. So that was all to do with method number 1. Method number 2. This is really easy, method number 2. Screen for the best blue chip stocks. And what we're going to do here is we're going to go to a tool in VectorVest called Unisearch. Unisearch is a screening tool. It effectively finds you stocks that are doing certain things. So in this example here, we're going to go to this tool here called Unisearch. I'm going to go to search as prudent, and I'm going to click on this one called best of the biggies. In other words, find me the best blue chip stocks. And look at this, relative value. Remember, we covered that in the first method, upside potential. So that's going to be above 1. Relative safety, how safe those stocks are, how consistent and reliable are the financials. So that also needs to be above 1 on a scale of 0 to 2. We don't want any penny stocks. The average volume over the last 50 days must be 100,000 or more. In other words, we're going to find some pretty big blue chip stocks. And we're not going to find any ETFs that short the market or any market indices. We want blue chips. And to ensure that we're going to find those blue chips, this is where the magic takes place. We then sort the stocks by this amazing sort. Relative timing times relative safety times earnings growth rate. What are those companies looking to grow their earnings by? Multiplied by their market cap. So the market capitalization is just a fancy way of saying the number of shares out there multiplied by the share price. In other words, how much money is out there currently invested into these companies. Hence, that's how you make the top 100 or 200 or whatever it might be. How big are those companies out there? So this market cap ensures we find the big blue chips. All right, and then we run the search and we bring those companies back. All right, so what I'm doing here, just zooming in. So all I've done here is I've just zoomed in. This is where we find it. and just zooming in, there are those parameters and that sort. Okay, so I'm going to close out of here. I'm going to do it for us. Unisearch, look how easy it is. Unisearch, scroll down to prudent, best the biggies. All right, I'm going to take this out for now, and I can run the search. All right, so this will bring me back the big blue chips. You can see 1 and 2 are sell rated, which means you just need to be careful before considering to buy it. I'm going to throw in a little extra twist for a bit of fun, just to show you the functionality of VectorVest and to make these really shine. We can see that we've got solid fundamentals, not penny stocks. These are the big blue chip end of town type shares. But I also want to make sure that I've got a rising set of earnings. So to do this final step, I'm going to come into here, just add in an extra line. This is the functionality you can do with VectorVest. You can take what you've got and you can add in or subtract, should you choose. I'm going to click on here and I'm going to go to price volume and actually no, capital appreciation and EPS. So I'm just going to find the earnings parameter and I'm just going to say to VectorVest, so all I did is I went to stocks, capital appreciation, and I went to EPS, and I'm telling VectorVest, make sure that my earnings, so delta means a change, make sure that my earnings over the last 10 weeks are growing more than 75% or 70, let's say, yeah, 75% or more. How about that? And run the search. My goodness, it's a pretty strict ask, isn't it? So not only do all these stocks meet this, but they must be growing their earnings by 75% or more. And if I graph these given stocks, you can see here, if I put the earnings on, let's just take all this off for now. You know, we've seen this earlier today, huge uplift in the earnings, rising share prices, right? Big uplift in the earnings, rising share prices. So this is what I'm doing across these companies here. The earnings are turning around, but probably a bit too aggressive for me. But, you know, the earnings are turning around, so we're expecting that share price to follow suit. Here the earnings are going up, up goes the share price. So what I'm going to do here, even though 1 or 2 of them are currently sell rated, I'm going to simply add them to my watch list to begin with. So right click, add watch list, and we'll put them back into our blue chip stocks. Right, so I'm going to add it in. All right, so method number 2, I went to Unisearch, search is prudent, best the biggies, okay, and I ran the search. And there it is. So just, I'll come back to a few of the other questions. There was one that popped up here from Robert. Russell, how did you create the sort RV times RS? This one here, this is pre-populated. All right, so the beauty is that it's already done for you. All I did here, if I just say no, I went to best the biggies and it's automatically done for me. All I did, I added in capital appreciation, EPS, I went into here and I went delta, and I went over the last 10 weeks, greater than or equal to 75%. That was it, and I ran the search. All right, so it's pre-populated already for me. If you want, you can click on this and you can change it. You can change it to what you prefer. All right, but there's a reason why that's the way it is, so I've just left it as is. All right, and then I put the top 10 into my watch list. Let's now go to our watch list. This is going to get interesting because I'm going to go now to my blue chip superstar stocks. All right, and I've put in 15 in total. Actually, no, I beg your pardon. I put in 15 found. Is it? There's 15 here, is it? So let's show all. Yep. So it looks like I put in 15. All right, so 10 and then another 5. Here they all are. Let me show you the average of all these stocks. So this is our starting point. I'll come down to the bottom. Right click on the average watch list, view watch list average. All right, here is the average of all those stocks. Let's pull it back a tad. All right, great set of rising earnings, up go those blue chip stocks. Average price of $16.93 currently. Let's look at the technicals, the short-term price momentum. In fact, I can actually change my layout here. Let's put it back onto the blue chip layout that I saved. Blue chip stocks, that's the one. All right, so it's nice and easy. It's done for me already. This is the stop line that we track each and every day. So if our portfolio on average breaks through the stop, it gives us a warning, but let's take that off for now. All right, up it goes. Technical holding apart from 1 or 2 days below 1, but the rest of the time nicely above 1. Earnings are rising, and our CI indicator is holding up above 1 very nicely too. There we are. There is a blue chip portfolio on the move. Now, let's throw in the dividends, because it's all very well looking at this, but we also want some dividends, don't we? So add in parameter, dividends. Let's look at the yield. What is the dividend yield doing? 3.3. So it's averaging about 3.3 currently. All right. And let's add in the franking credits. So I'll come back into here. Interim franking credits sitting at 50%, and final franking credits sitting at 47. So they're only about 50% franked. Don't know about you, but I wouldn't mind. I would like a bit more on the franking credit side of things. It's money, right? So why not? So what I'm going to do here is I'm going to come across to my franking credits, and let's click on the final franking credits, and let's wipe out anything that's not paying us a final franking credit. That's pretty low, 0, 0. This is only 20 or 30. This one was 10. So I'll take these ones out here where it's, below 50. All right, how about that? So I'll take them out. So I'll remove them there for now. So final franking credits that weren't really good enough. Actually, I think I've missed these ones as well. So we'll take those out as well. The 0 ones there. All right, and let's scroll back. So interim all now, it looks like at 100, and final franking credits, there's one at 50%, but I guess we'll forgive it because it's got an interim at 100, and we looked at car sales, it looked a pretty decent profile, a long-term profile. So I've whittled it down to 7. Let's look at the watch list average now. So these are very good dividend-paying stocks. All right, 4.35 is the dividend. The interim franking credits is 100%, and the final franking credit sits at 92%. So, that dividend of 4.35 is probably closer to about 6% fully grossed up. All right, so it's pretty decent. CI holding nicely above 1. There was a little bit of a slowdown in the earnings, but it's coming back up again, so that's positive. And the technical's been holding above 1 apart from, well, did it get below 1 there? No, just held on. And so technical's been holding on for quite some time. Earnings coming back up again, along with the comfort index holding well above 1 for quite some time now. So there we are. So this will give me both dividends and capital performance on these blue chip stocks. So you can look at them here and go, well, do you regard these as blue chip stocks? Well, they're in the ASX 100 and 200, all these. None of these here are penny stocks. They're all, the smallest one here is 2.75, followed by the next lowest one at 6.94. Okay, so that's how we do it. So method number 1, let's just do a quick recap. Viewers, we go to watch list viewer, so we go to the viewers tab, and we go to watch list viewer, and we go down to the S&P ASX. We do the exercise either through the 100 or the 200 watch list. All right, and we take the top 10 and we put them into a watch list. All right, exercise number 2, we go to Unisearch, we go to best of biggies. All I've suggested you do here is add in an additional line to make sure that your earnings are also rising in tandem with your fundamentals. Grab the top 5 or 10, or whatever you choose, and put them into your watch list. Once you put them into your watch list, then you want to go to your watch list. All right, so we go to our watch list, and this is the one we set up in this case here, and then you just do the final screening, check and balances. So you want to look at your earnings, you want to look at your relative timing, you want to look at your CI, comfort index. And once you've whittled it all down, you also want to then check on your dividends, do your dividends stack up, and then you've completed your final list. In this case here, I put heavy emphasis on the dividends, all right, maybe to a little bit to the detriment of my fundamentals a little bit, but having said that, it's still a pretty decent set of stocks there that are paying a very juicy, fully grossed up dividend yield of around about 6%. Okay, there it is with VectorVest. So, you shouldn't have to waste a lot of time every day. If you're looking to build blue chip portfolios, just simply follow what I taught you today. S&P ASX 100, grab the top 10, throw them into watch list. Go to Unisearch, go to your best, your biggies, put in an extra line there on earnings. I suggest you do that. Throw your top 5 or 10 into watch list. Then move along to your watch list and tweak the watch list. And there it is. That's your final list. Okay, so let's see. Question here. San asks, can you please take a look at CSL and CUV? So just using that methodology, let's do it. I was looking at Qantas this morning. Here we are. Yep. Actually, SAN. Beg your pardon. Sorry, CSL and SUV. Sorry, I got confused. There, San. Your name's San, and I'm looking at CSL. Beg your pardon. All right, so San, here we go. CSL. Well, you tell me based on what I've taught today. You see, look, yes, your earnings are good, but why are they struggling here? You can see the comfort index. It's broken below 1. Here it broke below 1 and it hasn't recovered since. And it's pretty anemic. It's sitting at a pretty awful 0.61 at the moment. Your problem at the moment is your technicals. When you zoom out a bit, look at that. They started to fall away here. What's interesting here is that your fundamentals are actually strong. The earnings are going up, but the technicals are coming off. All right. So from a short-term price momentum perspective, the technicals are falling away. Fundamentals are still holding steady. So what you want to do is you want to wait. You want to wait for your CI to start breaking up and your technicals to start breaking up to the upside. And then you may very well find that this starts to turn around. So the good news is it doesn't look like it's the fundamentals. The bad news is that it looks like it's the technicals at the moment. And so there's a technical storm from what I can see at the moment with CSL. Your technical has been falling for quite some time. All right. The other one that you asked to look at there, San, was CUV. All right. CUV. All right. So load this one up. Here we go. Pharmaceutical company. Great set of earnings. But look at your technicals. You see how it jumps out at you? There your technical starts breaking below 1 here. Falling. Breaks below 1 here. 0.89. Look at that. All right. Look at your CI, your comfort index. This is very telling. It breaks below 1 here. All right, so it's telling you, that the comfort behind the stock has fallen away. There, you want to be careful. To throw in an extra indicator that we track the VectorVest, we also track a buy, hold, sell rating just to give our subscribers extra, analysis here. We can see the safety here. Should I say that the sell rating pops up around about here at $17. It's now fallen all the way down to 14. So big a technical sell-off from the looks of it over here at the moment. And that's quite typical of pharmaceutical companies. It's kind of boom or bust. They run hard, and then all of a sudden, there's a bit of a panic that takes place, and then everybody rushes out for the exit again. The pharmaceutical industry tends to be a fairly volatile industry. All right. And Helen notes CSL at a 52-week low today. Yeah, I mean, so, again, really with those pharmaceutical companies and the likes, put on your CI indicator. If I'm seeing a CI indicator breaking below 1 on a pharmaceutical company, and again, I can't advise you personally because you've got to decide what you've got to do for you personally. But for me, when I see CI breaking below 1 in a pharmaceutical company, I don't tend to stick around too long. I tend to sort of take my profits or nurse my losses and get out quickly. All right, here it breaks below 1. Where was priced 277, is now sitting at 255. Okay, but prior to that, you started to see a breakdown, the technicals leading up to that. Look at that. It started sort of drifting, then a huge sort of a fall there. At that point there, it's, whoa, be careful, and if you're seeing the technical starting to drift downwards and your CI is below 1 and has been, or at least getting below 1, you want to be careful. Now at this point here, it was 1.1. All right, so you start to see technicals falling, but you're seeing it's come off from 1.26. It's now hitting, 1.12. You see it dip below 1 and sort of falling at this point here, and CI go sort of hanging on for dear life, just hanging on above 1. Here's kind of your exit point. It's telling you, be careful. because the flip side to that is, where's your opportunity cost of money? You could consider a company like Doug, for example, where it's the inverse. Look, the CI is broken above one here. The technicals are holding steady above one. The earnings are going up and up and up. Where is your money better spent? This is what I'm looking for, as opposed to the inverse. All right, so hope you enjoyed that today. Let me know in the chat box there. Did you get a lot out of it? Do you feel a bit more confident in analyzing your blue chips? Method number 1, ASX 100 or 200 watch list. They're all sorted by the fundamentals and technicals every day for you. So it's just a matter of taking, say, the top 10 and then running through your fundamentals by looking at your EPS, your earnings, and your relative timing, and your comfort index, should you choose. Put them into watch list, the top couple there, and then move over to Unisearch. All right, go to search as prudent, best the biggies, put in a little earnings parameter here to ensure that you've also got some good earnings. Run the search, throw those into watch list, and then once you've got your watch list, run through it, do your final checks and balances, concentrate on your dividends if that's important to you, which most certainly will be for most of us, and then you can whittle it down to your final list. So in the example that I covered today, I put heavy emphasis on the dividends, all right, and I whittled it down here to a 6% fully grossed up blue chip portfolio with also reasonable fundamentals in there as well. Okay, so that's how we do it. You don't have to spend days and days analyzing and researching companies. I used to do that. I used to be a financial analyst many years ago, and that's what I did for a living, sitting behind computer screens and crunching out discounted cash flow models and trying to work out what the valuation of companies were. All right, this is the methodology I prefer, because by the time I've researched a company and try to work out all its cash flows, the opportunity may very well have passed. All right, so let's see. Hello notes. Thanks, Russell. Yes, then help note, David. Is it possible to get the recording of the webinar? Notes, San. Absolutely, San. It is still recording. So it's always a nervous glance at the other screen to make sure that the recording hasn't failed. The technology is pretty robust these days. So I promise I will get you the recording to everybody in attendance today, or those who registered. Will send you out the recording. Just on that as well, if you are new to VectorVest and if you would like, so a few of you might be saying, well, what if I want to look at this a bit further? Let's see what we've got here. So this is everything that we covered. So if you want to email us, here's my email address, russellmarkham@vectorvest.com. Feel free to give me an email. You can also take out a trial, www.vectorvest.com.au/trial. All right, so you can email there. You can also email our support team, support@vectorvest.com. You can call our Australia toll-free number, 1-800-303-782. I'll bring up that slide at the end. I will also show you where we exist on YouTube. There's lots of really valuable lessons on YouTube. Done about 100 videos now. So I've just got to turn my head to the other screen. I'll bring this across now, VectorVest Australia. Let's see. Here we go. Okay, so here we go. Sorry, a bit of a typo there. I'll just take that out for now. Let's move that out the way. So here we are, VectorVest Australia. And on YouTube, if you go to YouTube, type in VectorVest Australia, you can't miss us. And we've got 111 videos these days, high momentum stocks. So I did a lot of technical breakout type stocks because that was pretty popular. We've got a portfolio stock picking challenge at the moment. So that was for a lot of our portfolio entrants. But, scrolling down a bit deeper into it, you'll see here our big end of town starts to move. That's all on blue chips. How to find the best dividend paying stocks. That's useful, kind of what we covered today. Earnings, dividend, and share price, unmistakable facts, very similar to what we covered today. Let's see here. I'll find some other big blue chip stuff for you. Best performers, that often covers the blue chips as well. All right, so there's plenty in here for you. It's just a matter of just scrolling through. I've done some analysis on the top 5 banks in Australia. That's also very popular with the blue chip investors. Here we are. Look at this one here. This was 2 years ago, Battle of the Blue Chips, and part 1 and part 2. I remember at the time that was very popular too. So anyway, look at that. Best dividend paying stocks, 3% or more. And often those are the blue chip stocks. So it's all there, should you choose to go and have a look. If you want a further recap and help on it, we've got it all there for you. So, and again, if you want to go to our VectorVest page, vectorvest.com, I'll just make sure I didn't get a typo here. Here we are. Okay. So vectorvest.com.au. If you want to take out a trial, there it is. You can click on Start My Trial, and you can test us out for, I think we've got 99 cents at the moment, or it's reverted to 9.95 USD. Just be aware it is USD, so not 9.95 USD, call it 15 Australian dollars. You can trial us out for 30 days. All right, and you'll get access to VectorVest for 30 days. All right, so there we are. I'll minimize it. There it all is for you to see. And I hope you enjoyed it. We'll get the recording out to you shortly. Okay, so thanks again for coming along. I hope you got a lot out of it. Just keep it simple. Method 1, ASX 100 or 200, grab the top 10, put them into watch list. Method number 2, go to Unisearch, prudent, best the biggies, put in an extra line there to ensure that you've got the earnings as well. Throw in the top 5 or 10 stocks into your watch list. Hop into your watch list, check your earnings, check your relative timing, check your CI scores, make sure it all stacks up, remove the ones that don't. If you're after dividends, then screen out any poor dividend payers, and there it is. You've got some of the best blue chip stocks with fundamentals, technicals, and earnings. All right, so thanks again. Yes, San asks, after 30 days, San, you can revert to either $59 US a month. All right, so I'd suggest you probably go to month to month to begin with, or if you then choose, if you know, after let's say 2 or 3 months, you're absolutely convinced, it is cheaper to go to an annual subscription of $645 USD. Check with the team because we also have specials from time to time at $595 USD for 12 months. But just be mindful, a 12-month subscription has a 12-month lock-in contract. All right, so if you're not sure, I think it's better off to test it for 30 days, then revert to a monthly and see how you go. And then after, say, a couple of months, if you're still really convinced, which I'm certain you will be, then at that point, then revert to an annual subscription. Because when you go month to month, there's no lock-in contract. If you decide it's no longer for you, you know, we can all walk away and be friends. You know, there's no frustrations about being locked in. So up to you to choose. I also suggest calling the team on 1-800-303-702 and talk to them. You know, any specials on the moment, you know, walk me through my different pricing plans should you choose. All right, I think that's it. Chris notes, thanks, Russell. Very interesting. All right, I'm glad I could be of help today. Good luck with your investing. Blue chip stocks, use those 2 methods I've shown you. We'll keep you on the right track. All right, have a great day, everybody. Bye for now.